Hello everyone, welcome back. Hope you had a good week. We're going to be doing another trade review today. So I'm going to be going through the trade that I took on, I think it was Thursday. Yeah, Thursday of last week, or the week just gone. Yeah, so this was a trade on Nasdaq. This was a little over $7,000 profit, 7,300 I believe. Really nice trade. I liked the framework behind this. It was something I don't typically, or it was a framework I don't typically trade a lot. It was a market maker buyer model, which is very, very popular in the sort of ICT community. But yeah, I personally don't have a lot of experience trading it, so it was nice to be able to catch this one this week. I'm going to try and keep this a little bit shorter than I normally do, because I normally end up rambling quite a lot. So we're going to try and keep it to about 15 minutes. So yeah, let's get into it. So, starting on the Nasdaq chart, we're on the daily to start. This candle here is the Monday, so this is the start of this week. Now obviously to end last week, we had some displacement lower, and we took out this pool of sell-side liquidity on the daily chart. So we opened up lower on Monday, fairly big weekly opening gap. We open up and we instantly continue how we left last week. So big drop lower, taking more sell-side liquidity. Now, the week we've just had was quite a slow week in terms of news. Let's quickly go back and have a look. So go back to Monday. So this is the entire week, very slow week, and we've only got 2 days in the week that have dollar high impact news. That's Monday and that's Thursday. So we're not expecting much movement throughout the week, but the days we can expect movement are Monday and Thursday, because that's got the dollar news. So it's no surprise that this candle here, the Monday, gives us a big drop here, continuing what we did last week. So that's sort of completed an objective right out the gate for us. So let's drop down to the hourly. So after the Monday, we're not typically looking to do a lot, because A, we don't have much news, and B, we've had a large range day completing an objective. Completing an objective. So what do we expect? We expect it to climb back into the range, especially when we see that yes, we took sell side here, but we made this sort of double bottom here. So retail views that as a strong level of support. Now, bit of forecasting, at some point I'm expecting us to come for this, but after we saw this sharp run lower, and then we started to get the retracement, and we have no considerable news on the Tuesday, we're expecting more consolidation, and that's exactly what we get. So we get this move lower, and then we get sort of 3 drives higher. Now, I typically wouldn't look to trade those, but they're nice to see because it's quite obvious what the story is here. Each time we get a new drive higher, after we've had this sort of framework, big move lower, creating retail support, each time we take a high, that's got quite a lot of traders behind it. A lot of people having buy stops above here because they think that this is a reversal. So each time we take highs, there's a lot of people in that. And also, each time we take highs without taking the lows, that's a really good thing. Because once we come above here, people have their stops below here. Once we come above here, people have their stops below here and here. Once we come above here, all of these lows have a lot of stop losses below them. So then what do we get on the Wednesday? Ripping lower, kicking all these people out. So anyone that was long, you've been stopped out. And the second thing that this drop lower accomplishes is anyone who wasn't expecting a reversal but is expecting continuation, they also have sell stops below these lows. So they're now entered thinking it's going to come lower, back down to here, or and continuing. But as an ICT trader, what I see is, yes, these drives higher, kicked everyone out. But the thing I'm looking for to tell me if we're coming lower or if this is just to kick them out and come higher is I'm looking at this box here. So if we go out to the daily, this is the low of this volume imbalance and fair value gap. And as you can see, we've, big displacement lower, kicking all these people out. But then look at the reaction we get at this level. Yeah, we get some wicks below it, but look at the bodies. The bodies barely close below that. Then we get some movement higher. We even get a bit of displacement. We get a fair value gap in here. Fair value gap and order block. And yes, it's not perfect. We do get bodies below this fair value gap, but look at the reaction away from the order block. We touch it. We don't even get a body really that close to it. We touch it and we're away. Then we consolidate. Let's drop down a little bit lower. Look at the consolidation around this level, around the order block and the fair value gap. That's telling you something, and it's all at the high time frame level. So at this point, we can look at this as more of a kicking people out to then continue higher. Now I know, we've had some strong displacement lower. That's not to be ignored, but that doesn't necessarily mean that we are just going to keep dropping lower. So when you have something like this that tells a story quite clearly, just make sure you're paying attention to older PD arrays as well, because they can help tell a story. If we would have dug back up into this range, into these fair value gaps, and then had another break lower, yeah, I probably would have been looking for us to come down here. But at this point, seeing this, and then seeing the displacement higher, probably expecting it to come back up to here. And, expecting us to dig somewhat more into this daily gap. I don't know if that's going to be sustained. I don't know if we're going to continue higher. It might have just been coming up here to kick the sellers out one more time, because people selling below here have their stop losses above here. So it might have just come up there to kick everyone out, buyers and sellers, and then it might continue lower. I don't know, but I didn't need to know for this trade. So dropping down after we've had all of that, let's drop down to the 5 minute. Okay, so let's look at the news we had for this day. So yeah, this is the Thursday where we had dollar news at 1:30. So we can expect some movement from this. 1:30 we have displacement higher. Now, as I said, if we were going to see lower prices, we'd want to see a move higher into this range, followed by a break of structure lower. That's what we would want to see if we were coming lower. The fact that we get displacement higher from the news tells us a lot. We can gauge a lot from this fair value gap. This fair value gap is essentially a fulcrum point for my bias. If we dip down into it and continue higher, I'm looking for bullishness. If we come below it, I'm looking for lower prices. And as you can see, we got the former. We dipped down into it and then came higher. Now, coupled with what I'm about to talk about now is what makes this such a powerful setup. So if you're familiar with ICT concepts or market maker models, then you'll know what this is. So this is a market maker buy model. Let's do actually, let's make it blue. I'm just going to get rid of this fair value gap for now. So, market maker buy model. We have our original consolidation here. Then we have first stage distribution. Drop down lower. Second stage distribution. Drops lower, taking out the sell side. Then we have our low risk buy here at the hourly order block and fair value gap that I talked about. Then we have the news displacement higher that takes us above this block. So if we're looking for lower prices, you can see bullishness delivered at these levels. So you're looking for it to get above this level, drop down in, and this is where smart money is accumulating buys. So you want to see displacement higher out of these levels. So once I saw this, and I saw that we'd come up above here, no doubt in my mind, we're coming up for here. This is the next target. Overall target is up here. This is normally what you aim for in a market maker buy model. But as I said, I don't typically trade these a lot, so I was happy to just take this as my target. So let's turn on executions. I got to this trade pretty late. So as you can see, the optimal place for this entry is this fair value gap here. And you hold either for here, or if you want to hold all the way for up here, that's fine as well. The reason why this is the best place for the trade is because we have the breaker here. These up close candles here is the breaker coupled with the fair value gap. As you can see, there's small little gaps in here, but you want to see it move hastily. You want to see it only need to come down for the first available PD array and then continue. And that's exactly what it does. So this was the optimal place to buy, but I missed that. So we are aiming for, let me put a line on it, this green line. This is our target. So another thing that was slightly different about this trade for me is I typically like, so if I'm bullish, I typically like to wait for an entry until we've come out to kick sellers, and then I look for it to show me that it still wants to go higher. However, when you have a target like this and you're sure price is just gunning for it, you don't really want to see it bother to come kick people out. You just want to see it hurry up and go for it. So when it takes time and it takes experience to be able to gauge those environments, but when you're confident you're in one of those environments, you can buy any discount PD array, any fair value gap, or any down close candle. If it returns to that, you can buy it and just stick your stop loss below it. Because if you're right and it's just running for it, it will use down close candles and fair value gaps to move higher. You won't need to see it come and take anyone out first. If we took out any significant level of buy side, then I probably would have waited for it to come take sell side. Because as you know, the market likes to pair liquidity. Once it takes buy side, it likes to come take sell side. But if you're just looking for it to move up to a level of buy side, any PD array that you see form, you can buy that and stick your stop loss below it. Now, like I said, that takes experience to be able to gauge those environments, but for the most part, that's a viable strategy. So, as I said, I was late to the party on this one, but I was looking when we were around here somewhere. I think I was looking around here. And what I just said is exactly what I did. I labelled the very first PD array I could find, which was a redelivered rebalance. That's when you have a candle stop here. The next one has a long wick on it, and then the next candle closes all the way through that. You take sort of from 2 candles back, the high of that, to the low of the candle after the displacement candle, and that acts the exact same as a fair value gap. So I labelled that. I had my stop loss at the high of this, and I had my entry at the high of this, and I put my stop loss below this fair value gap because it's used this to come higher here. I'm obviously wanting to see it come to this then move higher, but there's every chance that it could come back down to here again. So I'm not just going to have my stop loss below here. I'm going to be safe, and I'm going to have an extra PD array of defense for my entry. So just in case it wants to come and use this again, I'm protected, I'm below here. But my stop loss doesn't stay there for long. As soon as we come down into this, first of all, the candle closing back up here, lovely. We like to see a nice long wick on that. Only the lowest I'd like to see the next candle come is for 50% of this wick, and we don't even get there, which is a good sign. We close higher, making this a 1 minute bullish order block. And we don't want to see price come back down below that. So I move my stop loss from here up to just below the redelivery balance, because even though I don't want to see it come below the order block, there's still every chance it could come back down here to offer another chance at entries. So my stop loss goes below the redelivered rebalance. Then we retrade to the order block for any other entries from smart money, and then we close high again. At this point, pretty confident we're running to TP. Then when we get above this high, my stop loss moves to break even, because even though this is my target, when you take new highs, that's typically when you want to see it expand. If it takes new highs and then comes back down lower, that's not a good sign. That probably means that they were only targeting this, and now they could potentially come kick you out. So when you take new highs, it's a good idea to move stop loss to break even, because that's when you want to see it fly. If it comes back lower, that's not a good sign. So yeah, we took new highs. As I just said, this is typically when you could expect a reversal. So I labelled the very first PD array. This is the only thing I would want to see it come down for. If it got below this, I'd probably kill the trade, because that's not a good sign. So we come down, we just touch it, just touch the very high of it, and then look where this candle closes, all the way back up here. The second this candle closed up here, I move my stop loss to below this volume imbalance, because at this point I'm pretty sure next candle is going to open and run, and that's exactly what it did. We closed nice and high, and then we ran straight for target, which I think actually I must have had it on this high here. Yeah, so I had on that high there. Doesn't really matter. But yeah, just for completeness sake, to show the market maker buy model. So yeah, we got above here with displacement, came back down in, moved higher. Even though this was my target, we got above here with displacement, this fair value gap here. Came back down in. Yes, we closed below it, but then we create a balanced price range. So that is a 1000% solid win entry. That if you see that, yeah, we get below the fair value gap there, but then we create the balanced price range, buy that with 1000% risk. Obviously that's a joke, but I would, if I was looking at this, I would be extremely confident in buying this balanced price range. Stop just below it, and then yeah, we run for the high of the market maker buy model. Very powerful setup. I'm not surprised it's such a popular technique. Let me quickly cover dollar. I'm aware I've gone over the 15-minute mark, but we'll quickly cover what I was looking at on dollar. So dollar, very similar to Nasdaq. Started the week as it ended last week. We came and took high time frame sell side. So what can we expect? Digging back up into the range, because we're not having much news. So we climb back up into this daily fair value gap, but we create relative equal highs. Now, what days did we have dollar news? Monday and Thursday. When do we expect us to run this buy side? Thursday. The news was at 1:30, the 1:30 candle. What do? We run the buy side. And so we climb up into the daily fair value gap, but we also climb up into the weekly inversion fair value gap. So that's a very strong level. Why do we pick that level? Because it's the first high time frame array above this level of buy side. Now, 5-minute chart. This is the pattern we have. So even though we've climbed higher, I am overall bearish on dollar. So I want to see us take this buy side and then come lower. So we have this level of sell side here, which is my target, because we've moved higher, taking buy side here. we've moved higher again. So breakout traders have their buy stops above here and their sell stops. They have buy stops above here and their stop losses below here. So this is what I want to see it come down for, because we've touched a high time frame array. We get displacement lower and we take out this level of internal range sell side. So at this point I want to see a retracement and then continuation lower. I'll see retracement up into one of these three fair value gaps, and then I want to see a break of structure lower to come target this. The lower the fair value gap it needs to touch, the better. As I've said before, if you want to see it come lower, you want to see it be in a rush to do so. So you want to see it just barely touch the PD array it needs to, and then be in a hurry to move lower. And that's exactly what we get here. 5-minute chart, just tip into this lowest fair value gap. The very next candle, displacement lower. We get a convincing close lower. This could be viewed as a bullish order block, but this candle here closes right below mean threshold. And so this candle here is now our bearish order block. So at this point, this closed at 330. You can expect it to come up to here, but then you want to see it run lower for here. My entry was at 333. So yeah, just after this candle closed, somewhere inside this candle rebalancing to here, I wanted to see bullishness from this. And obviously bullishness on Nasdaq is best coupled with bearishness from dollar. So there we go. Little bit over the 15-minute mark, but that's a bit shorter than usual, so I'm hoping that wasn't quite as boring. But yes, I hope you felt like you learned something. I hope you enjoyed, and I will see you next week. Thank you very much.